Hey there! Did you know that if you took all the gold ever mined in human history, it would fit inside just 3 Olympic-sized swimming pools? That's it. 3 pools, which honestly feels weird, considering how much people lose their minds over it. Today we're asking the big shiny question, is gold still a smart investment? Or is it just really expensive bling? To dig into this, let's talk about my friend Sam. Sam's the kind of guy who's ready for anything. Zombie apocalypse? He's got a bunker. Global blackout? He's got backup generators? Economy collapses? Yep, you guessed it. Sam's got a little safe full of gold bars just sitting there like he's auditioning to be a pirate. Sam swears gold is the ultimate just-in-case plan. Meanwhile, his buddy Mia thinks gold is basically the world's fanciest paperweight. She's all about stocks, bonds, and apps that round up your spare change and turn it into a retirement fund. Who's right? Well, it's a little more complicated than burying treasure chests in your backyard. First off, why do humans even like gold so much? I mean, think about it. It's a metal you can't eat, can't really build much with, and it's pretty heavy if you're trying to run away from zombies. And yet, for thousands of years, civilizations have been obsessed with it. Ancient Egypt? Gold. The Aztecs? Gold. Pirates? Also gold, and maybe a parrot or two. Turns out, gold has a few magical properties. It doesn't rust, it's easy to shape, it's rare but not too rare, and it's really, really shiny. Humans, being basically magpies with anxiety, decided long ago that gold was the ultimate flex. Fast forward to today. Gold still holds this weird special status. Not because it's super useful, spoiler, it's not used in your smartphone nearly as much as you think, but because people believe in it. And belief is a powerful thing. Now, when it comes to investing, belief can be both your best friend and your worst enemy. Let's go back to Sam. When the stock market tanked during a financial crisis, Sam's gold stash went up in value. He was doing victory laps around his living room, clutching his gold bars like a dragon guarding its hoard. That's because gold tends to be what's called a safe haven asset. When things get scary, wars, recessions, pandemics, people freak out and pile into gold. It's like emotional comfort food for investors. But, and it's a big but, gold doesn't do anything. It doesn't grow. It doesn't generate profits like a company does. It just sits there being heavy and shiny. Mia, on the other hand, put her money into companies that made real stuff, sold real products, and grew over time. So while her investments had their ups and downs, over the long haul, her little portfolio snowballed, bigger and bigger. Meanwhile, Sam's gold just sat there, looking pretty and occasionally making him feel like a medieval king. Now here's where things get even trickier. Sometimes, gold prices shoot up like a bottle rocket. Other times, they just kind of hang out. For example, if you bought gold in 1980, back when everyone was panicking about inflation, you would have had to wait 25 years just to break even. That's basically the financial equivalent of waiting for your sourdough starter to rise, and it never does. Of course, if you bought gold in, say, 2005, you looked like a genius by 2011. Timing matters. But timing is also notoriously hard to get right, unless, again, you have that time machine we talked about earlier. And then there's inflation, the sneaky little monster that eats away at your money over time. Gold is supposed to protect you against inflation, but it's not a guaranteed shield. Sometimes it works beautifully. Sometimes, not so much. It's kind of like putting on sunscreen. You hope it protects you from getting burned. But if you miss a spot, ouch. Another thing. When you invest in gold, you're usually hoping that someone else will eventually want it more than you do and will pay a higher price for it. This is known as the greater fool theory. And while it sounds rude, it's a real concept in investing. The idea is simple. You're betting that down the road, a greater fool will come along willing to pay more for the same shiny rock you're holding. It's the same reason Beanie Babies were once worth hundreds of dollars. Ask your parents about that one. So where does that leave Sam and Mia? Sam's gold probably won't make him rich unless the world really goes sideways. But it might save him during a total meltdown, like if aliens invade and the stock market is just a smoking crater. Mia, meanwhile, is playing the long game. Her investments could grow and compound and eventually pay her back way more than a pile of gold ever could. But before you pick a side, there's one more curveball to throw into the mix. How you actually own gold matters a lot. Sam? He's old school. He's got real, physical gold bars tucked away in a safe that probably weighs more than his fridge. But most people today, they invest in gold through things like ETFs, exchange-traded funds, that basically say, hey, we're holding gold somewhere for you. Don't worry about it. Just enjoy the shiny feelings. It's convenient, sure. You don't have to worry about hiding a gold brick under your bed or explaining to your landlord why your closet now looks like Fort Knox. But it also means you're one step removed from the actual gold. If the system collapses so badly that you need physical gold, well, a piece of paper, or worse, an app notification saying, "Trust us, you have gold," might not cut it. Plus, owning physical gold comes with its own drama. You have to store it safely. Insure it. Make sure your weird Uncle Gary doesn't find out about it, because Gary is absolutely the type to borrow your gold for just a little while. So whether you go physical or digital, gold isn't as simple as just buying it and forgetting it exists. There's a little maintenance involved, like owning a very needy, very shiny pet rock. Another thing to think about, gold doesn't pay you anything while you own it. No dividends, no interest, no passive income. Stocks can send you dividend checks. Bonds can hand you interest payments. Gold just sits there, silently judging you. This is a big deal, because if you're trying to build wealth over time, reinvesting dividends and earning interest are like adding fuel to your financial rocket. Without them, your wealth grows way slower, like trying to push a car uphill with your pinky finger. Now, don't get me wrong. There are some smart reasons to have a little gold in your life. Big fancy investors, like hedge funds and pension funds and billionaires who probably own 3 yachts, often keep a small percentage of their money in gold. Think of it like adding hot sauce to your meal. A little bit can make the whole thing better. Too much, and suddenly you're crying at the dinner table and questioning all your life choices. Gold can act like a buffer in crazy times. When stocks crash, gold sometimes holds steady or even goes up, which can soften the blow to your overall portfolio. It's like emotional support metal, but betting everything you own on gold. That's a whole different vibe. It's like putting all your groceries into one flimsy plastic bag and hoping it doesn't rip halfway across the parking lot. If you zoom out and look at history, gold's performance compared to stocks isn't even close. Stocks, over the long run, have totally crushed gold when it comes to building wealth. Like high school varsity team playing against a bunch of toddlers. Crushed it. Gold's big strength isn't making you rich. It's about protecting what you already have. It's defense, not offense. It's a fire extinguisher, not a party cannon. And honestly, it all comes down to what kind of game you're trying to play. If you're trying to grow your money, build wealth, and eventually flex on your future self with a nice house, fun vacations, or early retirement, stocks, businesses, and other productive assets are your MVPs. But if you're the type who lies awake at night imagining hyperinflation, zombie banks, or alien invasions, shout out to Sam, then having a bit of gold might help you sleep better at night. Neither strategy is completely right or completely wrong. It's about finding the balance that fits you. Because let's be real, money isn't just about numbers. It's about emotion. Fear, excitement, hope, FOMO, it's all tangled up in the way we handle our cash. Some people need a little gold in their safe just to feel secure. Others are fine letting gold be someone else's shiny problem while they focus on growing a diversified portfolio. The danger comes when you think gold is some magical money printing machine, or that it's going to save you from every bad thing that could happen. It won't. Gold can help. It can protect. But it's not a superhero. And honestly, if aliens really do show up, I feel like they're probably going to want water or food, not a handful of shiny rocks. Just saying. So, in conclusion, gold isn't just a pretty rock, it's a tool. A very old, very shiny tool. It's good for protecting wealth, terrible for growing it, and should probably be a small sidekick in your money plan, not the whole plan itself. If you want to build real wealth, you still need the boring stuff. Investing steadily, diversifying smartly, and giving it all enough time to work its magic. Gold can be part of that, but it's not the star of the show. Treat it like emotional insurance, not a golden lottery ticket. If you want me to make other videos explaining these topics, please like and subscribe. Thanks for watching.